Iron trades.
Okay, so moving on. Candle behavior over time, patterns of intent. So, as we've talked about, a single candle gives you a snapshot of whatever time you're on, whether it's a minute, hour, 5 minutes. But a string of candles tells a story. It starts creating a narrative. And when you start reading sequences or narratives, you stop taking impulse trades because now you're looking at what an unfolding battle looks like as opposed to every single candle being its own indicator. So, for example, when you see multiple strong bodied candles back to back, heading in the same direction with little to no wick, that's a very controlled trend. You don't fade that. You respect it, you wait for exhaustion. So if you see many green candles, full bars, no wicks, just going one after the other, you don't fade that because buyers are in full control there. You wait till it exhausts, you wait till there's a retest on the back end, and then you see what happens. There's a retest, it holds, and then it continues up. You know where you're playing it. If it breaks down, then you know where you're playing it. But if you try to short or fade in the middle of that strong trend, you're gambling, and you're gambling on the bad end of the odds there. When candles alternate, green, red, that's what we call chop. So that's a value area. That's an area where there's a lot of participants and there's a lot of indecision. Prices going backwards and forwards, hasn't made a decision yet. So you step back. Unless you're scalping and you're very good, very agile, very quick, you stay out of that area. And when you see repeated wicks into the same level, let's say price just continues rejecting at like the 530 level on SPY or something like that, with upper wicks, zero follow through, that's a level that's being defended. If the price continues to hit the same level and be pushed away from it, resulting in wick after wick, that level is being defended. So it's either going to reverse from whatever that area is, whether it's coming down from on top or coming up from underneath. It's going to reverse after many wicks, and then you play the trend in the opposite direction, or you wait until it finally breaks that area, retests, then you play the next trend. A few really important sequences that you can look for: impulse into absorption into continuation, failed breakout into an engulfing reversal, and a stop run wick into a snapback body. And what we're going to do is just jump back to the chart and have a look at some examples of those particular ones. So we'll look for an impulse, absorption, continuation. And this is actually an example. So this is today on the SPY again. So impulse, absorption, continuation is essentially an N pattern, the letter N. We're looking here, impulse, absorption, so sellers absorbed it, except they weren't able to push it all the way back down. Continuation. Impulse is the first move, absorption is the retest, continuation, and you can see how large that continuation candle was. And you can even go as far as to say that this continued with another absorption and continuation. It was just weaker because it started to find its resistance up in this area. So that's what that pattern looks like. It looks like an N, and it can go in both directions. It can go up or down. Next one, failed breakout, engulfing reversal. Actually, we're going to go to the bottom one. The bottom one is an example that we can find straight away. A stop run wick and a snapback body. So essentially, we're talking about a failed level with a large wick and then a body that engulfs and snaps back. And in fact, the same pattern we just played has an example of that. So we can see large wick to the downside. I'm just going to make this a little bit more visible. Large wick to the downside. We're on the 1 minute, keep in mind. So this happened very quickly. The next candle immediately snapped back and it was bullishly engulfing, fully engulfed the body of the red candle. And then the impulse wave took us in the other direction. So remember, it is a stop run wick, snapback body. Stop run wick. So price would have shot down here, snapped back all the way. That's almost half the entire price movement that it came back. And then it body of the next candle took us the other direction. That's one that you can look for at a level. You can see here a support level generated by these candles earlier. All of these support levels are support candles right here. You can see price came back down, hit the support level, immediately snapped back and went the other direction. So that's actually a really common pattern that everyone can benefit from, and you can trade that quite frequently, quite successfully. So what is candle range theory, or CRT, which you'll see tweeted or posted or whatever? So we'll get into what it really means. It's setting your entries apart using CRT. It asks a simple and powerful question. How much did price move within a candle? And what did that range tell us about the battle that just happened, i.e. the battle between buyers and sellers? If a candle has a very wide range, that means that it was a strong move. And we're talking about the body here, not the wicks, the body. If the next candle stays inside that range, at inside bar, for example, then we're in a setup window because now price is coiling. So CRT helps us time our entries inside high conviction candles, define stops using our structure, avoid chasing outside of candles, and avoid getting wicked out, at least to the best of our ability. Nothing is 100%. So let's say we see a very big candle, a green candle, bouncing off the VWAP. Clean structure, no wick. That's intent. Now the next candle is smaller and holds within the first one. CRT tells us that if price holds the mid body and then starts pushing up, that we go long, and our stop would be under the midpoint. So first candle, consider that 100%, 1 to 100. The second candle stays within. So if it doesn't breach the 50% on the way back down, and then the third candle starts on its way back up, then our midpoint is our support zone, and we're going to be looking for the impulse to go long again. So it's not about predicting, it's about using the range logic, using the structure to identify where we can best get in, where we can participate without guessing. It's trying to improve probability edge on your entries. So entry logic. We'll walk through CRT entries because this is where the theory turns into execution. So break and hold above a high. If a strong candle forms and the next candle breaks the high and holds, that's continuation. You enter on the break or the retest, and the stop is under the body of the pivot candle. Reject high wick, enter mid body. So let's say price tries to break higher, gets rejected with a long wick, and closes back inside the prior candle. CRT tells us that was a fake out, and now we fade it, we go short, and your entry is in the mid body, your stop is above the fake out wick. Inside candle breakout. So when price prints a candle entirely within the prior one, so an inside bar, that's consolidation, as we've talked about. When it breaks that range with volume, and volume is key, that's the entry. So we're looking for a break to either side, but harmonic with volume. CRT gives us a structure based on a stop and a reason to be in the move, whether it's early or after the move is already happening. So these setups are especially high probability, as we said at the start, when there's structure involved. So a VWAP zone, a gap fill, edge of value areas, high volume nodes, after liquidity sweeps, fake out candles. And the best part is that the setup gives you defined risk and a structure based on your entry. So you always know when you're in, when you're out, where you're headed. So finally, just to summarize, candles as a tactical edge. The bottom line is candlesticks are not just visual, they're functional. They're real-time decision tools. So when they're used properly, they're real-time decision tools. CRT builds on the foundation by giving you precision, looking for entries, looking for exits, looking for stops and risk guardrails. It tells you where the market gave you a clue and whether the next move builds on that clue or breaks it down. We don't treat candles like indicators. We treat them as behavior, as a visual representation of behavior. And we always anchor our analysis in the context. So what is the structure we are near? What does the volume say is happening? Is this wick exhaustion or is it initiative? So mastering candles, being able to read candles, read the tape like a book, that's when you can insert CRT, and it means you're no longer guessing. You're executing with logic. You're using timing. You're using your clarity and your vision. And that's what separates the traders who are able to survive, who are able to scale, to the ones who maybe are blowing accounts really frequently or just are not seeing forward momentum. Before we finish up, We'll see if we can find just an example of one of these entries because we talked about it, but they generally need a visual to help. So we're looking for a break, hold above the high, and then a continuation. The impulse pattern that we talked about before is actually a really good example of that. But I don't think today on the SPY, here we go. So we're going to actually look for, this is a bearish version of what we just talked about. So it's a break, hold, continuation. We might actually move it up to the 2 minute. Much cleaner example here. So same price action we were just looking at. Now, the pattern we're looking at is break, hold above high, trend continuation. Now we're going to do bearish, so break, hold above low, hold below low, trend continuation. Similar to the end pattern we had before. Break, hold below the low, continuation. So you can see that the early morning move was an impulse to the downside. The candles, we had a consolidation here, and you could even, if we were on a smaller time frame, it would look a little bit neater, but you can see that the candles was getting smaller. We got a slightly smaller green candle, an inside bar red candle, and then we had a long wick break to the downside. But you can see that this tightening, this coiling, that's the consolidation. So break, consolidate, continue breaking to the downside. That's the type of pattern we'd be looking at. And in the context of the CRT here, the way that you would interpret this is that we have a break, red candle after red candle, and then we finally had a green candle. So that's the retest. We've got breaking to the downside all the way to here. The retest now comes back up. Ooh. The retest comes back up, and we want to see a specific level be respected. And we're going to treat the previous red candle as the zone that we want to see respected if we want to take a short entry. So if you want to take a short entry on this particular break, you're saying to yourself, okay, here's the red candle, and then we had an immediate reversal. Here's the previous level that all the seller participants were sitting at. So we're going to highlight that level and say that if the sellers in this level maintain control, if they continue to sell and price cannot break up back through there, then we think sellers are going to remain in control and we're going to short. So the buy action came back to this zone. It actually didn't even make it to the top of the previous red candle. The next candle opened here. So we know red candles, the top of the body is where it opened. Price pushed up and then was immediately met by sellers. And we know this because it's a wick. And we know that the price closed at the bottom of the red candle. So price started its journey to the upside. Sellers kicked in, pushed it back to the downside. If you're looking at CRT at this point, you may choose to enter right here. You're looking at that first rejection after price came back up and saying that's good enough for me. If you were waiting, you might wait for this next candle. And because the exact same thing happened, price started to move up. It was met by sellers, pushed immediately back down. We know this because it's a wick and it's a red candle, meaning it started here, moved up, finished down here. If you're taking a risk-averse CRT entry, you're likely entering here. You're going short in this area after price has been rejected from the upside. And then you're actually golden. You had 3 full candles before price met. So if you're me, for instance, this is the 95.5, and down here is 94. That's a full point on SPY. That's getting you a pretty good option premium. I'm probably exiting somewhere in this candle just for the scalp. As I said, these are micro scalps that we're talking about. If you raise the time frame on these and you apply the same logic, you're getting a much larger move because you're now moving well away from these micro scalps. But that's just one example of how you would implement this CRT into a scalp or a trade.
Iron Trades.